Welcome to another podcast with Investing Education Academy. As you can see, the well lit Leon Noble. We got a light now, so we are super excited. But before we dive into Leon's new light, let's talk about what changes are coming to IAA. We're going to start covering the market a little differently than you all have seen in the past. Now, want to say thank you for everybody who's been tuning in to all of these podcasts. Thank you for asking questions and giving us someone to respond to, because honestly, we're not doing it just to talk. We talk to each other every day. We're doing it to bring information to our community, and even those that are just loosely connected to our community who maybe aren't familiar with investing, or they've been thinking about investing. You've seen these courses online that are $5,000-$6,000, and you're thinking, well, I'm starting from scratch. I don't know if I'm ready for a course like that, or I don't know them. We're doing it for you all. If you go back through our podcast, there's an education far beyond what you'll pay for in a lot of classes. And, with that being said, when we first started, Leon and I said this from day one, this market is not normal. We said, do not get used to this market. It will not always be like that. However, no one knew it'd be like this. This market has never been seen in history. Like history. The inflationary numbers haven't been seen in like 40 years. I mean, everything about what's happening right now is groundbreaking. So if you are an investor, and especially if you've been an investor for like the last year and a half, you rode an extreme high and you rode an extreme low. And that is not, no one is isolated really from that. You have people like, oh, I have this option strategy where I'm killing it. Okay. When the direction of the market changes, most of those strategies go out the window. And then you have those people like, oh, I'm trading Forex. So, I don't even care about the market. You really need to get into this Forex game. Many of them are lying. And then the ones that are not lying, you have to be dealing with a ridiculously high amount of money to truly win in Forex trading, depending on how you do it. But that's a whole nother thing. So why the change? What is the change? How does the change affect me? We're going to cover all those items today. We're going to talk. If you have questions about what we're going to say, please ask us. So let's start off with this. Leon, do you have anything to say before I dive full in?
No.
Okay. So like we said before, this market hasn't been seen in history. However, history has shown us something very important. Even with the outbreak of the Boer War, let's look at this as I don't even know what this is. The 1929 crash, Great Depression, worst crash ever. Great Depression, post-war bear market, World War One, influenza, the height of the Cold War, Cuban Missile Crisis. You get it. I don't have to go through everything. But what I do want to do is to take my arrow real quick and show you, even with this extreme negative dips, you're talking roughly 1915, 1913 to 1922. It looks horrible when you think about it. That's only 7 years. And at the end of that 7 years, over roughly a 6-year pattern, you saw the stock market spike. Like, you're talking over 1,000% rate of return. This is like the volume, the money made during that time period for those who intelligently stayed in the market turned out very well. And then if you look at this period from, let's just go to the Great Depression, through World War II, World War I, World War II, and then the post-war bear market, you're still talking about a 10, 15-year period. People are still making money during this, because if you can't really see it because the market has grown so high, but it's still ticking up. Like, this is a higher level than during the Great Depression. And then the post-war bear market is significantly higher than the Great Depression and World War II. Why does this matter? Why is that of importance? Because right now we are in an unprecedented time, and people are panicking, and they think, okay, what was pretty much a market that was printing money for the last like 2 years, depending again when you got in, that's not happening. And also you're seeing this correction And people are seeing corrections anywhere from 10 to 60, 70, 80%, depending on if you were heavy tech or if you were speculative. And that there's some people getting it worse than that because they were all speculative. And they thought, I'm just going to jump into all these SPACs. I'm going to invest in all these IPOs. Leon and I covered IPOs. Again, this is not something that this is not because of the market. We covered IPOs in general. When it was a good market, we were telling you to stay away from IPOs. And we explained why. Go back, check that podcast. So why are we saying all this right now? We are trying to change our members' expectation of the market. And we are reminding everyone who is not intimately familiar with the market that even when you look starting the date is 1870. Even when you look at 1870 and you go up to 2020, this is 2020. $1 invested in 1870 is still worth almost $20,000 now. That's $1. Why is that important? Because it shows that the market has still, through all of this, trended up. Right now, it feels like the market is going to fall through the floor and we're going to lose everything. If you look at all of these scenarios, there hasn't been a long-lasting scenario where the market just began to free fall and continue to free fall. So we can only assume, back by unless you think the U.S. government is going to fold, that the market will correct itself even coming out of this correction. So for IEA, Leon has been, everyone in this community knows Leon's been building a software. And this software, do you want to tell them? You want me to
tell them? Yeah, I'll give a little spiel on it. So yeah, I mean, the software been fellow IEA member Dave Curry have been building for the past year and a half. I use right now to pick stocks. We're basically codifying that and automating it. All the research that I currently do, all that will be done automatically onto the software. And so it's the point now where we're almost ready to debut it. Debuted first to the portfolio Panthers inside IEA, but then we'll roll it out to the community sometime probably next year. But kind of the point where I showed this chart here before, but we're showing again now because a lot of people are panicking. A lot of people are just suffering. Right? I mean, Brent and I are. We always say that we're in this painful. An IEA member earlier today who called me to shout out to Mo. He just called me. Market sucks, right? Like the market is terrible. Here's an idea I have. What do you think? Right idea. Generally, his idea was in this down market where you want to go after anything speculative, anything not making money. He was asking, hey, should I be focused the Microsofts, the Home Depots, the Fives of the world? And I was like, dude, that's spot on. That's exactly where you're because we know, for the most part, as history told us, companies like that will be around from now. Companies that are not profitable, companies that are, as Brent said, that are SPACs, that don't have revenue and no profits. We have no idea if they're going to be around. But again, back to the reason why we're pointing this out now. And just an aside, I read an article that said that that showed that millennials and Gen Zs actually closing down their brokerage accounts and pulling money out of the market. This article kind of resonated with me, and the reason it was really written is because the last 2 years, the people that are empowering the market have been Gen Zs and millennials, because they jumped in when they were sent home from school, so they were just home. A lot of them now are pulling out. The reason they're pulling out is because in 2 years of essentially free money. The market went straight up, and interest rates were zero, and the market was going straight up. That's all changed. Like that's all gone away. Now those same millennials are seeing a down market. They're now seeing, the 30, 40, 50% they made the last 2 years. And it's not any fault of their own. It's just they didn't know what they were really doing in the beginning, and this market right now. So kind of back to Brent's point is that one thing and Brent said, the shift we're making is we're really going to be pushing hard our community, essentially the type of stocks that you want to buy in this environment. So we and y'all made with our recent podcast stock picks, they've been very, very boring sectors that we've never really talked about: healthcare, defense, things like that pay, but they've been very, very boring stocks. But anybody who's followed us in a lot of these has either they haven't lost money or they've lost a lot less money, and that's the whole goal in this environment. Like the point right now is to lose as little money as possible. It's not even to make money, because that's not. You don't. If you go sit in cash, you're gonna lose some money relative to if you're in the market. If you're in quality stocks in the market, you can kind of make some money, because again, stocks that are outperforming the market right now, you can make a little bit of money, and if they pay a dividend, you can make even more. So many of the last couple months have been very boring, not sexy, not something that you write home. Either make money, you won't lose money, or you lose less money than if you were in things that are kind of the point we want to make about this video is that the type of stocks we're going to be not recommend, will be non-sexy. There'll be things that you probably never heard of, but that's the whole point, right? We're getting away from the sexy. We're getting away from the things that worked 2 years ago, and so that's going to be a relatively big change coming to the community.
So what we're going to do is we're going to start focusing more of our attention on research, and also in serving our community members, giving them a different look than what they had before. You're going to see some changes. The hot seat is going to be switched up. Many of the members have expressed their interest in seeing what the bigger institutions are doing during those sessions, and we've listened. So we're going to start showing not only, it might be from time to time we show members' portfolios, but we're going to start figuring out, like, if as much as we can, what are the Warren Buffetts of the world? What are the Jay-Z's of the world investing in? How are they investing in it? And we're going to do research to figure out, like, can we see a piece of their portfolio? What are some of these institutional funds doing? What are some of these sectors composed of? We're going to do a lot deeper dive in deconstructing what the market is, who's investing in what, and what we think makes sense versus what we think maybe doesn't. So we're going to be more direct with our members in regards to what we're looking at, what we think could be a good buy, or at least something for them to research. And we're going to not be as forward facing as we were before. So our lives are going to switch from every week to every other week. And we're going to be, our next live will be on the 5th, I believe it is, of, let me see. Yep. October the 5th will be our next live. And it's going to be every other week from here on out, because we're going to be doing more research. We're going to be utilizing the software that Leon is going to be launching soon. Leon and Dave will be launching soon for the benefit of our community. So if you're an IEA member, we have the advantage of being able to benefit. Some will benefit from the information that this technology is going to be delivering to us. And we're going to be going full in. Like, our community is going to be where we dump all of our information, and it's going to be much more direct in regards to how we navigate through this market. But as a whole, we're doing this because the mindset for anybody, this is for anybody watching right now, anybody listening to the podcast, your mindset.
You take down the
yeah. So your mindset in this market should not be, how do I win like right now? It's, how do I position myself right now to have an amazing win later? This is not the market where you just get out and wait. Well, it depends on who you are and what you need the money for. So it always depends. But by default, this should not be the market that you think, well, I'm just going to get out and just watch. I've even in this environment, someone that we know who's an investor, they decided to liquidate everything, and they just wanted to watch the market. That liquidation and sitting on the sideline kept them from having their account appreciate about $30,000. But they thought there was no way that possible they could make money in this market, but it was. It was the way the account was already structured. They would have made about 30,000, but they wanted to just look for a while, and they didn't lose it, because that's the possibility, and you got to figure out like what is important for you. So we are going to be asking members direct questions in the platform. We're going to be talking to people in a way more engaging than we were before. But for these lives and our podcast, please tune in every other week so we can give you an update on the market and give you some thoughts that we believe that you should be considering in this day and age. Leon, what happened with the Fed today?
This kind of speaks also to kind of why we're shifting a bit in the way that we're going to be, and the stocks will be highlighting. A big portion of it is because of the Fed, right? I mean, because of the Federal Reserve. And so just give a quick recap. Say the Federal Reserve raised by 75 basis points, or 3/4 of 1%. The 3.25. The reason that's important is because that federal funds rate that was essentially at 0, now 3.25. And the reason that's important is because that federal funds rate affects every. So if you're going out to get a new, variable rate and even mortgage rate. So any type of personal loans and mortgage, specifically mortgages. Mortgage rates we're at 6%. After this raise, they'll probably be above well in the 6%, maybe closing on 6.5. So right now the federal funds rate is 3.25. Remember, that affects every other rate. Funds rate to hit 4.5 by the end of this year. So that means we have another 5% more interest rate hikes coming this year. So anything that you have, any sort of personal loan, if you have a mortgage rate locked in, great. If you have a like an ARM, or your mortgage rates are going up every month because the Fed is raising rates, they want to hit that. They want to hit their target of 4. That's just this year. If inflation has not shown to, as they say, meaningfully, if it's not meaningfully reduced, they're going to raise again in January, and then they keep raising rates until inflation is meaningfully either slow down or stop. Inflation is 2%. Inflation right now is 8.5%. 8.5% back down to 2%, what it was before COVID. Rates are going to have to go significantly. The federal funds rate may approach 5%, which then in the real economy, mortgage rates are probably going to go well above 30% interest rates, and then mortgage rates. So any sort of debt that you have right now, if you can pay it off ASAP, do it. Money to it, do it. If you can eliminate it, do it. Because the cost of money is going up. The ways to affect the stock market is, we said this many times before. Oh, another point. So today I was watching a show with investors, and this one lady said she did something today. She's a hedge fund manager. Said she did something today she's never done in her life. She bought a treasury bill from the U.S. government. When she did that, that bill is paying 4% for 1 year. Imagine that. You drop $100,000 into treasury. That's what, $4,000. Yeah, $4,000 in a year. Let's just say it's risk free. Unless the U.S. government blows up, it's risk free. So she's going to make $4,000 in a year risk free. She's never done that before in her life, right? Now think about that. Big funds out here, hedge funds, home offices that are like, these treasury bills. So all these things that pay interest rates are going up too. So all these other assets that pay interest rates are now stock market, because that money that she put into that treasury bill did not go in the stock market. Therefore, the stock market, anybody that's selling is going to be more downward pressure on it. So the stock market now has, and that's why we're seeing this really just nasty market, because people are going in and out of bonds, coming out of the market. It's just a whole rigmarole, and none of this is going to end. None of this. We're not going to see any sustained rally in the stock market until the Federal Reserve is done raising rates. We're nowhere near that, because again, they want to get from 8.5% right now, which inflation is. To do that, they have to slow the economy. That's what raising rates does. It stops all types of borrowing from happening. People sadly, the unemployment rate right now is about 3.5%. They're 0.5 to either or 5% unemployment rate before the economy will meaningfully. And Jerome Powell, the head of the Fed, said there's going to be a lot of pain. He used the word multiple times. Economy until inflation goes from 8.5%, which it is now, down to 2%. So everyone just be prepared that the stock market that we're in right now is terrible. It's going to remain for the next 8 to 12 months, probably another year, unless if the market, if we see inflation drop, like in other words, if we CPI next month, and if it's down to 6%, the market's going to take off, because that's a mean inflation, and that signals the Federal Reserve, hey, they can pump the brakes on raising rates. But if we drip of 8%, 8.3, 8.1, maybe 7.9, it's going to be a hard. So that's what I'm predicting. I think it's going to be a hard slog in this market until inflation comes down. So you want to stay defensive. You want to do defense stocks, healthcare, financials, banks, things like that. Members should actually the individual stocks they should actually look at inside the membership. So that's what happened today regarding the Fed.
All right, so everybody, we owe you two things. We are going to be putting our picks. Are we switching to putting the picks solely in the membership platform? Or are we doing the Facebook one in Facebook group one?
No. So solely. So both our picks now are solely on.
All right. So if you want to see the picks, log in. You can find them. If you have any questions about them, please ask us. We'll answer them the best we can. And with that being said, we thank everybody again. Don't look for us next week. All right, next time we'll be on will be October 5th. It'll be every other week from here on.
And real quick, sorry, everybody in our membership platform, nothing's going to change. I'll be getting more information regarding the type of stocks to consider in this market, because like our attention now on research, just because again, the free money, the easy market, it's becoming a stock pickers market, and we're going to really focus on picking individual stocks for the committee.
Yep. Everybody, we thank you again for being with us. Thank you for continuing to ask us questions, supporting us, allowing us to support you all. We're not going away. We're just changing the platform. Enjoy the rest of your week, and we will see you all on October 5th.